Hello, thanks for joining me again. This is Christopher Aaron. We are coming to you from iGoldAdvisor.com. It's time for our weekend update on gold and silver. And it was a very interesting week this week. A lot of strength here on Friday, and we want to get right into it to update you guys on how we see these long term bottoms forming. Starting today with the gold market, we will be looking at silver today as well in the second half of this video. So here is the action today for the price of gold. And for anyone who's been following this market for a long while, you will remember seeing days like this in years past. We haven't seen that many up days like this in a long while. So this was a really strong up day where we had the price of gold coming back down toward the 1105 level and then shooting up right here at the open of the New York COMEX market and surpassing the level from the previous 3 days and then closing well above that level. And a day like today is showing us that there is some significant underlying strength here developing in the gold market. So we'll be seeing a lot more days like this over the months and the years to come. If you follow the market on a regular basis, you're going to start to see days like this popping up increasingly as we go along. And this will be fairly exciting for people who are going to be in this market for the next few years. So let's put that into perspective here on the 6-month chart. Again, we're using the GLD fund because it helps me to track the price a little bit more accurately with my color coordination system that I've developed for my own use. And we have today, you can see we made the last video, the price of gold was down here right at the 106.5 to 107 level on the GLD fund. And with today's surge, we've come right back up here to around 109. So that was a great move on the day. But to put it in perspective, we have to keep in mind that what this represents is still a triangular consolidation. So we came back down here to the short-term trend line, this teal trend line, and now we've popped back up again to this primary downtrend line here shown in blue. So this is obviously not the first time we've hit this downtrend line. Once was about a week ago, then a few weeks prior, and then back over the later parts of the spring and into the summer we had these two hits here. So this is just to show you that yes, there has been this strength today in the gold market, and that is a very good sign for things to come. But in the intermediate term, we are still in this consolidation. So for anyone who's kind of looking at this and saying, well, there's this strength, maybe I want to go all in right now, put my entire position into the market, we're here to say you may want to wait until this consolidation resolves itself. Now, this won't take much longer to resolve. You're maybe talking about the course of the next several weeks, and we'll be bringing it to you to interpret this action. But typically, these triangular consolidations resolve in the same direction as the primary trend. So in that case, this would be down. And that would give us a target of somewhere around $1,000 on the price of gold. So, of course, none of these targets are 100% accurate, and we are maintaining that possibility that this could be the final bottom that we're seeing in place right now. But we like to let the market tell us, and there's no worry here about waiting for another few weeks or waiting to see what happens as this comes back down into the consolidation. There's no worry about that. You're not going to miss the entire bull market if you wait another few days or a few weeks to see how this resolves. And then you say, okay, we broke out. It's time to move more capital into this market. Or we've come down, we've broken down, and now we're actually waiting for what I believe the final bottom to be. So this just shows you where we are on the intermediate term, the 6-month time frame, putting today's strong move into perspective. Just to look at the other side of this equation here, the gold miners, showing some interesting strength here today, basically breaking out of what we are calling a bottoming bullish wedge pattern. So it's taking on a slightly different pattern here for the companies that actually dig this metal out of the ground, of course, whose profits are leveraged to the price of that metal. And so this is taking a slightly different shape. It's not a consolidation, it's a wedge pattern where these lows are still coming down and the highs were coming down at a quicker rate. This actually represents a pattern that usually resolves to the upside. And there are some market forces here in play that can explain that. For example, at every subsequent low, you have buyers coming in at a level which is higher, relative speaking, to the sellers. So the sellers are coming in here at these highs, and the buyers are coming in at these lows. And we can see those buyers coming in quicker and quicker and quicker every time. And that represents strength. That's usually a bottoming process here. So today we have that breakout above this short-term bottoming process. And this gives us a possibility here of running to around 16 on the GDX over the course of the next week to 10 days. And this is exactly the kind of action we would expect to see as the beginning stages of a long-term bottom. So that corresponds to what we expect coming in the gold market, just taking a slightly different form here for the miners versus the metal itself. Getting back to gold, the metal, this is backing out to that 1-year chart again. And here we can see that consolidation we were talking about. We're now zoomed out one level. So we have our long-term downtrend here shown in magenta. We have the primary downtrend that's been in play since the beginning of 2015. And here shown by this red arrow is that next hit coming on that downtrend line. And here we've seen our support levels rising as this consolidation plays out. Now you can see here really clearly this triangular formulation coming into play, and this will resolve one way or another. So we still have some potential, like we're saying, over the course of the next several weeks for this consolidation, and then either some weakness if this breaks down or some strength. And if that is strength, there's a high likelihood that this is the bottom for the bear market that we're looking at right here. If this breaks down, then we're going to be watching for that bottom coming into play sometime in the last quarter, which we're just beginning right now. So there's the look at the gold market. Let's switch over to the silver side. Again, here's that strength for today. Nice strong move here in the silver market, closing around the highs. Up, boy, that's almost $1 intraday. And that represents somewhere around a 4.5% move if my back of the envelope math calculation serves me here. That's a strong move for a commodity to move this percentage in one day. So it's showing you that there's this buying pressure here that's coming in. And we're going to see days like this, mark my words, over the course of the next 2 years. We're going to see days like this where it's a multi-dollar move. You're going to have days where you're up $2 or $3, where these lines here on the y-axis are not 20-cent lines, but they're more like 50-cent lines or dollar lines, and you're going to be moving through multiple dollars in one day. But this is sort of giving us a preview of that strength. And that shows you here, we're calling this an attempt to break out of this intermediate term downtrend line here in silver. We can see that some of the shorter term downtrend lines have already been broken. as represented here by this turquoise color. We're of course keeping a watch out because we do have what often becomes false breakout attempts. So we're watching for that here. We have this breakout attempt here, but we have a strong resistance here around the 15 level on the SLV, which corresponds to 1550 or so on the silver metal itself, silver bullion. Switching over to the silver mining side, again, it's a similar difference here that we're seeing in silver mining versus silver when we take that comparison to the gold miners as we looked a few slides ago. And this is again the miner which we call Silver Wheaton, ticker SLW. It's pretty much one of the strongest silver miners in the space, consistently year over year. So we use this one to show us what may be coming for the silver market because it often tends to lead the silver market. And so we're seeing here this breakout in progress from this wedge pattern, this bottoming wedge pattern. So this is very important. This is what a long-term bottom would look like in this stock, which tends to lead the metal. So it shows us there's a strong chance that the metal may be forming a long-term bottom as we speak. Now, when Silver Wheaton approaches this downtrend line here, we'll see what happens. It may take a few more attempts to break above that and start moving significantly higher. But we'll be bringing that to you as it comes along. Backing up again to silver bullion here, we are looking at the 1-year chart, and we can see how this again has made an attempt to break above this downtrend line, shown here by the red arrows. And this is a very complex bottoming pattern that we're looking at here. Aside from the possibility that this may take one more down leg based on the head and shoulders target that we were looking at from early 2015, what we're seeing here is a really choppy bottoming pattern. There's a lot of these strong up legs and strong down legs, and another strong up leg and a strong down leg. And this is sort of representative of a market that is trying to find its footing. It's seeing a lot of buying pressure, and then it's seeing a lot of selling pressure. So this is a market that is trying to establish some sense of direction. And we can see, because it's bumping up against this resistance level multiple times, it's trying to break through that. Now, it may not be quite ready to do that. So that's what we're keeping that possibility open for over the course of the next several weeks to several months, that this could come back down below this $14 low that was hit in late August. Let's get right into the summary. We are seeing these strong up days, and these are a sign of things to come. It's a sign of the underlying demand coming into the precious metals market, as some other things are going on in the world stock markets and currency markets that make people say, hey, you know what, I want to take 5 or 10 or 20% of my assets and start moving them into precious metals, which, as we all know, the vast majority of people, both in the United States and internationally, have little to zero exposure in the precious metals. So we're seeing that demand coming in as certain individuals and institutions start establishing positions. These forms represent complex bottoms that are being put into play. And bottoms take many different forms, but we've showed you the sort of consolidation pattern that's forming in gold, and then the bullish wedge patterns that formed in the miners. So all in all, these represent complex bottoming patterns. There may be one more down leg left to go. We are watching for that, and that will represent an excellent buying opportunity. So we talked about those confirmation bottoms there in the mining complex. And Basically, what I really want to emphasize as a takeaway for this presentation, for anyone who's watching, is to try to time your purchases. If you're on a long-term accumulation plan for gold, let's say you're buying 1 ounce of gold every month, or maybe you have more disposable income, you're buying 5 or 10 ounces every couple months. Or if you're someone who's, just buying 5 or 10 ounces of silver, which is fantastic, on a monthly basis, try to time your purchases after the down legs, not after these surges. Because trust me, there's always going to be another down leg. Even in an up market, you're going to have days and weeks where the price falls. And if you're a long-term investor, you want to take advantage of that. So that's what we're trying to bring you in these presentations. I'm trying to show people how some of the long-term trend changes manifest in these short-term up and down moves, because if you're a long-term investor, again, you want to take advantage of those down moves. So we're going to be trying to show you those as we go along here. Now, there's not going to be anything wrong with buying after a surge in the long term, but in the short term, you might be kicking yourself. You might be saying, man, I could have bought silver for 50 cents or $1.50 cheaper, or I could have saved $50 per ounce of gold had I just waited a few days. So we're trying to bring you those opportunities. On that note, guys, I'm going to close this out for today. Thanks for joining me. Just wanted to ask you if you would please subscribe to this channel. That way I can kind of have an idea of how many people are actually following this work. If you find this interesting, if there's anyone else you know who is interested in the precious metals market, please share it with them. And I just wanted to remind people that I do have some free research available on the website igoldadvisor.com. There's going to be some free research there for you. There's also some premium research that I can't share in a video format that is more easy to put out there in a written format. So that's there if you would like it. Thanks again for joining me. We will see you sometime mid next week.